today we are going to go through the #1 thing that turned my trading around from being a break-even, very slightly profitable trader, making maybe 2 or 3% in a month, to sometimes making upwards of 20% in a week. Now, this is the #1 part of the strategy which we trade at FTR, the link below, and this will hopefully help link together the rest of the videos that I've created over the past 1.5 to 2 years. Now, if you are a new or intermediate trader, this is going to be gold dust to you. I'm just going to draw it out for you first, and then we're going to jump into the charts, and I'm going to show you numerous examples of how it works. So if you like it, please do subscribe, because there's going to be a second part of this video. So first of all, let's just make an example on the charts. The market, I always say this, moves literally zone to zone. You can sometimes describe this as support and resistance trading. You can class it as supply and demand, but you will see on the charts in a second just how frequently this happens. Just imagine, for argument's sake, that price is somewhere in the middle over here. We know that it's either going to go to here or it's going to go to here first. We don't know just yet which way it's going to go. The simplistic way to trade, if we think that it's going to be going long, we're going to be placing a buy order pretty much around here, our stop loss just below the area, and we're going to target up there. This is how I used to trade for about a year. I had a win rate of about 65%, but I had a risk reward ratio of somewhere between 1.5 up to maybe 6 if I was lucky. The other drawback was that I was trading on the daily time frame. So I knew basically where price was going to go to with a high degree of accuracy, and I was using such a high time frame that I was sometimes in trades for maybe 3 or 4 days, but quite often 3 or 4 weeks. And I knew with the leverage on my account and the size of my account at the time, I was not going to get rich anytime soon. With this in mind, even though I was a consistently profitable trader, it was not enough. It was not going to replace my 9 to 5. It was not going to make me rich. Now, bearing this in mind, once price reaches one of these areas, I now have a dilemma, a choice to make. Am I going to be looking for a continuation, or am I going to be looking for a reversal? Now, if I'm looking for a continuation, it's relatively simple. If you go back to the mathematically unbeatable video, I talk about pullbacks, okay? It's really quite simple. What we would look for is for price to pass through the area on the time frame which I'm looking at, come back, retest an order block within here, and move on to the next area, okay? So we'd create another one up here, and that would be our target. Now, if we were looking for a reversal, let's just consider that the market may have done this beforehand, okay? May have been working its way down on an even higher time frame trend, working its way down, consolidating down here, which is why we thought this might be a reversal area, worked its way up to this area, which may well be an order block on a higher time frame. We would be considering dropping down to a lower time frame once we reach this area and look to reverse it down to at least just here for the time being. So with that, if we're looking for a lower time frame entry, we've got a couple of things to consider. First thing is just going to be a very standard style of candlestick, okay? So that candlestick could be a bearish pin bar, would have in this instance, a red body on it and a long wick on top, or I might be looking for something like an outside bar to show that momentum has shifted, and an outside bar would look something like this. Preferably it's classed as an engulfing candle. I'd look for a longer wick on the right hand candle, and I'd look for a red body on it which extends lower than the lowest point of the low of the previous candle when we're leading into it. And again, this just shows that the market might be switching momentum, and for me to be able to place the trade, I would essentially just look for an entry straight off the close of that candle, and I would feed it down, obviously not to scale. There's those two elements, but then we also have the standard chock, okay? So if you ever look at market structure videos, I've done quite a few videos on them. If you go back through my order block series or backtesting series, I use it on a regular basis, okay? It's just the same as the previous video where we're looking for pullbacks, except when we don't get the pullback which holds and we get a pass through that previous structure low, we'll look for a retest of an order block within here to try and feed it down to that area. So once price approaches something like this, a previous area, we do have that dilemma. Is price going to pass through and move on to the next zone, or is it going to get a reversal and drop down to this zone? Now, the beauty of it is this, okay? So I used to have a stop loss of around about 50 pips, and I'd have a target of about 100 to 150 pips. That's great, but it was a very small risk reward ratio. Now, on a lower time frame, if you can scale it down using the daily as your structure or the weekly as your structure, structure, scale it down to the H4, the H1 or 15, or even the 1 minute. If you know exactly what you're looking for, you might get a series of stop outs, and that's absolutely fine. But you should be able to increase your risk reward ratio from about 1 to 2 up to 10, 20, sometimes 50R. They come in less frequently, obviously, because the risk reward ratio is higher, but they do happen, and they happen to appear at least on a weekly basis. Sometimes you'll get 2 or 3 in a week. Other times you won't get any for a week or 2, but that's just the probabilities in the market. So what we're going to do now is we're going to jump across to the actual charts, and we're going to go through a couple of areas where we would have had those dilemmas where we'd be thinking, do we pass through or do we drop down to a lower time frame and try to reverse it? Let's have a look. Right, what I'm going to do is I'm going to use my current charts, because luckily I've got some of these areas already marked out, and we can just go over past price action, which is still relevant. As you can see, I have this laid out for multi-time frame analysis. Over on the left, we've got the daily, H4, M15, and 1 minute. Sometimes it's going to be the 5 second, 1 minute, 15, and H4. Depends what time availability I've got, but it's just how we trade. I'm just going to come to one of these areas over here and just explain it on the H4. So we use order blocks mostly as our key areas for bouncing. Okay, so these are going to be key areas where price reacts from on a regular basis, and sometimes we're looking for a direct mitigation of the order block, which means coming right into the area, or just a bounce off of it. Now, we've got key criteria for different types of order blocks and different points of interest, otherwise just known as POIs, but we are going to draw our attention to this one in particular. Just above us, we had a H4 POI up here. It was an inside bar. It was a key area of interest to us. Also, just a pullback, so an order block off of a sharp downturn in the market previously. So we're expecting price to react from here a couple of times. So our initial target, or our obvious target, was going to be up there. We were expecting a bounce after working our way up. We were expecting some sort of bounce or mitigation of this area. I'm going to drop down to a lower time frame to see what kind of reaction we got. Bear in mind, if you're looking for just a particular candlestick, that means that you're getting in without a confirmation. Okay, it's a better confirmation than just a bounce off of the area, but we're looking for specific candles. So it may be a green candle which we're looking for, or we can look for chalk on a lower time frame. Chalk is a slight element of confirmation, and then you can get confirmation after chalk, which is one iteration of boss, which is a broker structure. Let's just drop down to a lower time frame to see how things went. So this was the key point of interest that we were interested in. Okay, so if we drop down to a lower time frame, we can look at the generalized price action. Okay, we'd created a zone around here. This was a previous area which we were expecting. Again, another bounce, an area which we could expect price to potentially react from again. And as we were approaching this area, we were seeing that price was starting to show a little bit of weakness. It was looking as though price was collapsing. Okay, so price dropped really rapidly, reacted from a previous order block, came down, started to slow its momentum. It started to go, aggressively like that, and then zigzagging. So it showed a little bit of weakness around literally just the entry to the order block, which is absolutely fine. So we could start looking very, very quickly at potential reversals in the market. And bear in mind, this was really at the very start of the day. Timing in the market is also quite important. The start of the London session and the start of Frankfurt session, it's pretty much where a ton of volume comes into the market. So just a little bit of background information. Now, what we had was one order block worked right here, actually. So there was one working down to our initial target. So once we'd hit the target, fantastic. And then we had a bounce. Now we have a doji right here, okay? We worked our way down. We just mitigated the order block on the higher time frame. So this being the lower time frame, i.e. the M15, tapped into it. We then got an inside bar doji, which is essentially an area of consolidation. We then had an outside bar doji again, which is showing again that the market is a little bit undecided of where it's going to go, and then an extremely bullish candle in comparison to the previous ones. Combine that with the time of day, it was the Frankfurt Open, which is where the volume comes in for Europe. An hour later, we've got the London Open, which is the major volume for that session, and that's pretty much where price decided to come down and hit. We were looking at this doji right here, which was the final order block just before we had the bounce. This is what I call a 50-50. It's something which is either going to work or it's going to fail miserably. We were expecting potentially for price to just completely crash through that, but it's a 50-50-ish chance that we are actually going to get a bounce off it. Now the 15-minute is okay, and it shows us that we could get an entry directly off of that, and if we did, it would have been this as a risk reward ratio 14R, okay? Because the target, if we go back to the time frame which we'd identified the original order block on, we need to go back to the H4 to try and see where we're going to target. Now we could either go for the actual inside bar order block, or we could go for the structure. I think on this one I may have gone for the structure just to be safe, but essentially this would be the target. This was the entry down here, and you just have to leave it. Dropping down to the 15 minutes, yeah, it looks like I went for the structure rather than the inside bar. In this instance, it was a 14R trade, which is fantastic. Again, if we drop down to the 1 minute, I will show you hopefully the confirmation that we got and where it was an improvement on the ROI. We had literally, if we just follow the price action, we worked our way down, pushed up, worked our way down. So we've got our main structure up here again for this time frame, for the 1 minute. We had a period of consolidation around here where price failed to break it. We had a minor pullback, creating an order block. This little red candle was the order block. They're the blocked orders. They're the guys who thought that price was going to bounce down. And this is what we could have taken as well. We could have taken that short, but we didn't. The price pushed up, started trying to push a little bit higher again. And then it came down, tapped that order block, released the guys from their position, and then off we went. Now, if we took the trade off of that order block, which is what we actually did do, the risk reward ratio goes from 14 up to 25. Okay. And this, the target was literally just to the structure. I could have held it a little bit further, which would have been somewhere around there, but I didn't. So there's one instance where it happened. Also, let's go back and look at this other trade. Okay, so on the, I think it was on the 15 minute, it made a lot more sense. On the 1 minute right here, to me personally, it doesn't make too much sense to take that trade, but on the 15 minutes, it made perfect sense because of the structure of the candle. Either way, it came in, it worked, it was a 5R trade. Now let's come back to some previous price action, which we had just before the huge red news event on Friday. That was essentially a rejection, again, on the H4, straight off of that inside bar, which we'd identified a little bit earlier. We got some kind of reaction off of here, which looked like we're at least going for a short-term pullback to one of these before breaking upwards. Obviously that didn't happen, but off of this reaction here on the M15, what we had was this leg being created, and it was quite an aggressive leg, showing that price was being rejected from that area, and we're probably heading at least to this zone. And halfway down that leg, we had this little pullback. Really standard, it's the halfway point, it's called the EQ in the style of trading that we do. We just placed our point of interest tool right there, and we were expecting reaction. Essentially, it's not just that, but I want to draw your attention to, okay? So the initial trade, because there are order blocks behind us, okay, there's other areas where we could have price reverse back to, our target is going to be adjusted. So we're expecting price to come down and react to the last order block on the M15, but really we'll want to try and see a break of structure. So the actual target is going to be here. Now, if we get involved with a trade, it's going to be like that and like this, okay? So that's a standard 1 to 5 trade, which is good, but I want to draw your attention to the M1, something which had happened as a reaction from here, which just continues as a continuation trade. But as I mentioned before, you need to pay attention to the higher time frame, because the higher time frame needs to be the basis of where your target is going to be set, okay? So the M15 is the structure which we're now playing. We're not necessarily playing directly to the H4, which is 2 time frames above what we're going to be looking for the entry on, which is on the 1 minute. So the 1 minute came in and it created something like this. Here it was. So we couldn't identify a valid order block within the structure itself, so we couldn't just take a trade directly off the 1 minute. And on the 1 minute, we got a bit of a tricky candle, okay? So we could have gone directly from the close of that candle if we wanted to, a very bearish candle compared to the rest of the structure, it's sweat, and we could have just targeted down here to try and get that continuation, but at only 3.24, it's not particularly valid because we tried to target a minimum of 1 to 4. With that in mind, what happened is that the ISM news, I think, it wasn't that big, yeah, ISM services, about 20 pips, but the reaction from this is what created our interest, okay? Following the structure, okay, so we had that initial push down and rejection from that area, okay? So price had passed through here initially, had rejected, come back up, news event happened, price pulled up and then broke down. So it broke this sort of minor structure here. So this now generates effectively a new order block. Let me just move that out the way. A new order block, which is a point of interest, is a key area for us, which has happened right there. And we could place our trade directly off of that in the place where we want to try and do it, and just target literally the lowest point of the structure on that time frame. And again, it's a 1 to 5.5-ish trade, and that would have played out within the period of an hour and a half. So again, just showing you something on a lower time frame basis, how we trade. You don't always manage to get win after win after win. Sometimes they lose, but I hope that it makes a little bit more sense to you. And if you don't have time to trade all of this yourself, but you still want to be able to get my markups and try and figure out where we're going to be getting involved in the markets, we do have a markup service as well, which I'm going to list below. Catch you in the next video, subscribe.